Hello and welcome. If you want to know exactly what it takes for an auditor to maintain top-tier quality, you are absolutely in the right place. Today we are diving deep into an exhaustive explainer of Standard on Auditing 220. We are going to comprehensively cover every single line of the source material, ensuring absolutely nothing is left out. Let's get right into it. To give you complete conceptual clarity, we have a clear 5-part journey ahead. We will start with introduction and definitions, move through leadership and ethics, acceptance and team assignment, engagement performance, and finally wrap up with monitoring and documentation. So, here is the crucial distinction you need to understand right off the bat. While your entire accounting firm is governed by the broader Standard on Quality Control, or SQC1, SA 220 is different. It specifically mandates the procedures required at the individual engagement level. It is there to make absolutely sure your final audit report is flawless, fully compliant, and totally appropriate for the specific circumstances.
Okay, let's kick things off with Section 1, Introduction and Definitions.
Let's break down the core players as defined by the ICAI. Now, do pay close attention here. The engagement partner absolutely must be a member of the Institute in full-time practice. As for the engagement team, this includes any contracted experts, but it strictly excludes internal auditors who are providing direct assistance under SA 610. Also, it's vital to remember that the team can actually rely on the firm's broader quality control system for things like recruitment and independence tracking, well, unless the firm specifically tells them otherwise. Moving smoothly to Section 2, Leadership and Ethics. Quality, you see, doesn't just happen by magic. It requires immense responsibility right at the top.
The engagement partner is the one taking ultimate responsibility for the overall quality of each and every individual audit. They have to champion a firm culture where high-quality work is the absolute top priority. And honestly, the most important part? The partner must make sure that team members feel totally empowered to raise concerns and flag issues without any fear of reprisals whatsoever. That tone is set right at the top.
Throughout the entire engagement, the partner has to remain highly alert for any non-compliance with the fundamental ethical principles from the ICAI Code of Ethics. We are talking about integrity, objectivity, professional competence, confidentiality, and professional behavior. These are simply non-negotiable. The partner must observe, ask the right questions, and take immediate action if any breaches occur, especially when navigating the rather complex boundaries of what actually constitutes a network firm.
Now, this gives us a very structured 3-step approach to independence. The partner has to obtain information, evaluate any breaches, and then either apply safeguards or simply withdraw from the engagement entirely. But there is a very important exception to note here. For central or state government entities where statutory measures apply and the law literally doesn't permit withdrawal, the auditor might instead need to formally disclose that independence threat through a public report.
Right. Having secured our independence, we advance to Section 3, Acceptance and Team Assignment.
The partner must be completely satisfied that client acceptance and continuance procedures have been rigorously followed. You have to assess the integrity of the owners, for sure, but you also need to ask yourself, does your team actually have the time and resources to do this job properly? Now, if you are an auditor of a government entity appointed by statute, you might bypass these standard acceptance procedures entirely, but you will still meticulously use all this data for your risk assessment.
It is entirely on the engagement partner to ensure the team collectively has the right competence. And yes, that includes any contracted experts. The team needs practical experience with similar complexities, a solid grasp of legal standards, and the ability to apply true professional judgment. And for government audits, this also means having any specialized skills required for public interest reporting.
Let's dive right into Section 4, Engagement Performance. This outlines the really rigorous supervision required when you're actually out there executing the audit. The execution phase demands continuous, sharp attention. The partner has to direct the team on SA2CO requirements, especially keeping up that professional skepticism. They supervise the progress, tweak the approach if needed, and make absolutely sure that firm review policies are followed. That typically means your more experienced team members are carefully reviewing the work of the less experienced ones to catch any potential blind spots.
Now, we know the partner isn't going to read every single working paper, but they absolutely carry the heavy burden of reviewing critical areas of judgment and significant risks. And here is the key. They must do this on or before the date of the auditor's report. They also have to meticulously document the timing and extent of these reviews, exactly as mandated by SAW 230.
What happens if the team hits a roadblock on a really technical issue? Well, they must consult.
This could be internally or even outside the firm if you just don't have the expertise in-house. The crucial takeaway is that the partner has to ensure all facts are provided, the conclusions are fully agreed upon by everyone involved, and most importantly, that those conclusions are actually implemented in the audit.
Notice the major escalation in quality control here. For a normal engagement, partner review is fine, but for listed entities or massive government bodies with wide public interest, you strictly require an independent engagement quality control reviewer or EQCR. And under SA 700, you absolutely cannot date that auditor's report until this independent review is 100% complete.
Think of the EQCR as your objective, independent safety net. They rigorously evaluate all the significant judgments made by the team. Things like materiality, how you responded to fraud risks under SA 240, and what you did with uncorrected misstatements. They even review the wording for key audit matters under SA 701. All this objective evaluation happens before the ink even dries on the partner's signature.
But that brings up a highly vital question. Human nature being what it is, disagreements are bound to happen. So how exactly do we handle differences of opinion between the partner, the team, or even the EQCR?
Well, the standard is incredibly strict here. You cannot just brush a disagreement under the rug. It must be formally resolved following the firm's specific SQC1 framework. Personal disagreements can never compromise audit quality, and that final report can't be issued until the difference of opinion is fully and adequately resolved according to firm policy.
Okay, let's move to our final stretch, Section 5, covering the vital, non-negotiable elements of monitoring and documentation.
A firm's quality control system is constantly being monitored, right? The engagement partner has to consider the results of the firm's latest internal monitoring process. However, do note carefully, even if the firm's overall system has a noted deficiency, it doesn't automatically mean your specific audit is flawed. But the partner must actively assess the firm's remedial measures and ensure this particular engagement remains completely unaffected.
There is a golden rule in our profession. If it is not documented, it is simply not done. The auditor must meticulously record all ethical resolutions, independence verifications, and client acceptance conclusions. Plus, the detailed nature, scope, and final outcomes of all those difficult consultations we talked about must be properly filed away in the final audit documentation.
Similarly, the engagement quality control reviewer has their own strict documentation duties. They have to formally document that their review was completely finished on or before the report date. They must state in writing that they found no lingering issues or unresolved matters that would invalidate the team's significant judgments.
We leave you with this final provocative thought on the sheer weight of responsibility embedded within SA 220. The engagement partner's signature carries the massive weight of the firm's entire quality control system. So, are you fully confident your procedures can withstand objective scrutiny? If you found this exhaustive explainer valuable for your CA studies or your professional practice, please do like, share, and subscribe to our channel for more complete and highly detailed standard breakdowns. Thank you so much for learning with us today.